The world's most valuable company is back in the news. Nvidia's meteoric rise has now met an abrupt shift in investor sentiment, highlighted by several of the world's most prominent investors choosing to sell their stakes. At one point in 2025, Nvidia's market capitalization touched $5 trillion, such extreme growth that the company alone makes up nearly 8% of S&P 500's value. Its surge was driven by insatiable demand for AI chips, which underpin technologies like ChatGPT and much of the world's artificial intelligence infrastructure. Nvidia's annual net profit jumped more than 580% in just 2 years, feeding a sense of exuberance among both Wall Street and retail investors. The tide began to shift in the last quarter as Peter Thiel's hedge fund sold its entire Nvidia stake, over 500,000 shares worth about $100 million. Just days later, Japan's SoftBank liquidated all of its Nvidia holdings for more than $5.8 billion, reportedly to fund new investments in OpenAI. The most public skeptic, Michael Burry, famous for calling the 2008 mortgage crash, disclosed that his hedge fund was betting against Nvidia and Palantir, sinking roughly $9.2 million into put options designed to profit if their share prices fall. Burry's criticisms were pointed. He accused tech giants of understating depreciation for Nvidia's chips, warning that rapid equipment obsolescence can soon hammer profit margins, and this skepticism, coupled with a need for liquidity and shifting risk appetites, motivated the elite investors' sales. Despite the different motivations, the timing immediately before Nvidia's latest quarterly earnings heightened market jitters. As word of these high-profile exits spread, Nvidia's shares declined by over 7% in last 5 days ahead of the earnings report, contributing to broader tech and cryptocurrency weakness. Wall Street's Fear Index, or the VIX, jumped amid anxiety about the sustainability of Nvidia's performance. The broader view is that AI rally may be showing signs of speculative excess reminiscent of the dot-com bubble. Burry's comparison has further fueled doubts about how much further AI-driven stocks like Nvidia can rise before a correction sets in. At the core of Nvidia's valuation is its dominance in supplying chips to train and run AI models. Analysts expect another blowout performance, projecting third quarter revenue surpassing $54 billion, more than a 50% year-on-year increase, with data center and Blackwell chip sales as key drivers. But the bar now sits exceptionally high. Any earnings or guidance that falls even slightly short of expectations could trigger a rapid decline in the stock price. In fact, options markets are bracing for a record-breaking $320 billion swing in Nvidia's market value when results are announced, an extraordinary level of volatility that underscores investor nervousness. Overvaluation concerns are also mounting. Nvidia's rapid expansion is increasingly seen as tied to circular AI spending, where tech giants may be overbuilding capacity in anticipation of future demand that may not materialize, risking inventory gluts. Now, restrictions have also further challenged the outlook as US export controls block advanced AI chips from entering China, and Chinese policies also now explicitly favor local competitors. Today's earnings report stands as a critical test for Nvidia and the broader AI investment narrative. Wall Street expects powerful growth in revenue and profit, but investors will scrutinize future guidance for signs of demand durability and margin integrity. If Nvidia delivers decisive beat and rise results and reassures markets about strong strong forward order books, especially outside China, the shares may recover as per some experts. If instead the company appears vulnerable to slowing growth or market saturation, the sell-off could intensify with far-reaching implications for all AI-related stocks, and that will only be worse for the markets which lost trillions of dollars already in the AI crash. What do you think about this? Let us know in the comments, and like, share and subscribe to ET Now for more such news and views.
If you like this video, then like, share and subscribe to ET Now.